If you're thinking of buying or selling a home in 2025, then you might be worried or concerned about what is happening right now in the current real estate market. A lot of people are wondering if this is going to be a good year to finally buy or sell for people who have been waiting for a long time. So that is exactly what I'll be covering in this video. I'll be covering what is happening right now in the real estate market, the most important real estate trends, both on a national level and here in Oregon, the impact that interest rates have had, what to expect in 2025, and the most important thing in this video that I'll be covering is if you're buying a home, how you can save quite a bit of money on your mortgage payments. So make sure you watch all the way to the end as I talk about that. By the way, if you're new here, my name is Daniel Roberts. I'm the principal broker and team leader of the Joyful Roberts Real Estate Group. We work with one of the largest real estate companies in Oregon, which is Premier Property Group. We help people move to Newberg and the Southwest Portland area all the time. So if that's you, definitely reach out to us at the information at the bottom of the screen. We would be more than happy to help you out. All right, let's get started. So where are we today? Well, if you haven't noticed, housing prices have not crashed, despite so many people in 2023 and 2024 saying that prices of houses were going to crash. Now, I hate to say I told you so, but, well, you know. Now, prices definitely have been up and down seasonally, as you can see in this graph. But the Portland area still saw appreciation of about 2% over the past year. And the median home price was about $540,000. Now in Yamhill County, where I live, the median home price was about $480,000, which was up about 4% over the year prior. So we definitely saw prices go up and down, but still prices are going up despite high interest rates. Now, if you want to know why home prices didn't crash and why they won't, in this video, I basically did an entire economics lesson of what's happening with the supply and demand and demographics, all of that, and basically explained why a housing crash was essentially impossible. I also shared that a huge wave of millennials was going to hit the market this year. What I didn't expect, however, was this. The median homebuyer age went from 49 years old to last year 56 years old, which is an all-time high. Essentially, because interest rates were high and prices did not crash, only the older and wealthier people could buy homes. This also affected first-time homebuyers. So instead of first-time homebuyers being 35 like they were in 2023, the median first-time homebuyer was actually 38. They also made up the smallest percentage ever at only 24% of the market instead of 32% of the market as they did in 2023. Now this is actually really significant because there is still a huge wave of millennials who are all waiting to buy their first homes. The problem is homes are just too expensive with the current interest rates. Now this graph shows Oregon's population from 2022. And the base of that peak, where that circle is the number of people who are 38 in 2025. So we're right at the age where buyers are getting ready to buy their first homes. Now, I thought that because the age of first-time home buyers was 35, that we were about to hit the big part of that spike. Now, if people are delaying, then it means that we're just going to be a little bit more delayed. So there's still a lot of people who want to buy homes, but it may not all happen this year. The main thing to keep in mind is that interest rates are the thing that's controlling all of this. If interest rates lower, which many people expected, then we would see a pretty big influx of people. But if interest rates stay high, then it's likely that we'll continue to see that median homebuyer age either go up or stay at the elevated level like it is right now. And speaking of interest rates, well, what's happening with those? Mortgage interest rates went in 2022 from just above 3% to 7% before the end of the year. And since mid-2022, interest rates have stayed in that 6 to 7.5% range, mostly on the higher side. All right, so what exactly does this mean? Well, say you're buying a home in 2022 and you've got a 3% interest rate you're looking at. If you have 5% down on a $500,000 home, your payment is probably going to be somewhere around $2,500. Now, obviously, I'm making some assumptions here, but that's going to be right in the range of what someone's paying. Now, if they went to buy the exact same home, $500,000, but 7% interest rate instead of 3%, their payment would be closer to $3,700, which is a $1,200 difference. If they still had a 3% interest rate, they could buy a $775,000 home for the same monthly payment as they could a $500,000 home with a 7% interest rate. So interest rate does make a huge difference, and going from 3% to 7% obviously slowed some things down. With that said, it's understandable that people predicted a housing crash. In fact, you might be wondering, how is it possible that a housing crash didn't happen if instead of paying $2,500 a month, people are having to pay $3,700 a month for the exact same house? That seems ridiculous. Well, keep in mind, we still have a severe housing shortage. When interest rates went as low as they did, every single house had multiple bidding wars and homes were gone in pretty much an instant. Now we're seeing homes last much longer on the market, and I'll get to that in just a second. But something that's important to understand with a housing shortage is that in about 2007, builders really just stopped building almost altogether. We went from about 25,000 homes being built every year in Oregon to about 5,000 homes, and we've slowly been building our way up from there. And in 2024, there were somewhere around 15,000 new homes that were started. But there's this huge backlog of homes that haven't been built. So if prices came down at all, there are a lot of people who would be willing and ready to buy that home. And that's exactly what we've seen. As soon as there's been a price drop, people go in and buy the home. And this isn't just an Oregon issue. This is a national issue. You can see in this graph that home building really stopped even as early as 2006, and it's been a slow build back since then. All right, so taking all of this, what does that mean for you if you're buying or selling this year? Well, going into 2025, things are probably still going to be pretty slow as long as interest rates stay where they are and don't significantly drop. Right now, interest rates are still around 7%. Over the past couple of months, we've seen interest rates continue to increase, and we finally saw a little bit of a break, but no one knows exactly what's going to happen. Most predictions for 2025 were that we would continue to see Fed interest rate cuts, which by the way are different than 30-year mortgage rates, as you can see on the graph. So they predicted that the Fed would continue cutting the rate, which is shown in blue, and that the red line, which is 30-year mortgage rate, would settle to around 6% and stay there for most of the year. Now, two things about this graph. One, this graph from the National Association of Realtors is a few months old, so it doesn't show the spike in rates that we've seen right now, and it doesn't take into account the Fed rates we've already seen. So we're actually not at 6%, we're closer to 7%. So the second thing that this graph doesn't take into account, nor do almost any of the predictions, is the volatility that we're almost certainly going to see. As you can see in this graph, in 2024, we went from rates being above 7% all the way down to almost 6% in a matter of a few months, and then they went back up again. So personally, I think we're going to see rates in the mid sixes for much of 2025, but we're going to see quite a bit of volatility. We'll see rates probably going down into the low sixes, maybe high fives, and up into the low sevens, and they'll probably go up and down in that range. So what's important for you to know, whether you're buying or selling, is what are interest rates doing at that moment. The interesting thing though is that interest rates don't affect home prices like you think they should. Mostly what it's affecting is how quickly a home is off the market. What a lot of buyers have done is gotten all of their paperwork together, gotten pre-approved, and waited until interest rates were at a point where it makes sense to write an offer. Now, this is kind of a mixed bag, and it's not really a sure strategy because sometimes interest rates go down and you think they're going to keep going down, and then they go back up again, and it doesn't really work. So at any given moment, no one really knows whether rates are going to keep going up or keep going down. The bottom line, though, is it's good to be prepared in case interest rates do continue to go down and you have that window opening. Either way, don't bet on interest rates dropping significantly, even if they do come down a little bit in 2025. That said, if rates do drop below 6%, we will see a lot of activity, especially in the spring. If rates stay in the low to mid sixes, things will proceed pretty much as normal, and most people at this point really are just hoping for a rate in the low sixes instead of in the low sevens. But if rates stay higher in the 7% range, I think we'll see less appreciation somewhere in that 2 to 4% range like we saw this year. Since 2022, homes have stayed on the market for longer and longer, as you can see in this graph. So if you're selling a home, be prepared to have your home sitting on the market for a bit. If you're wanting to sell quickly, you may need to have your home listed a little bit below market value. When we list our homes, we do quite a bit of marketing and do a lot to really promote the home, but there's really only so much you can do to make a home sell that is overpriced. If you're a buyer, there may not be a whole lot of options to choose from. Again, as I explained in that video, I mentioned because people are holding on to those low interest rates. So we may not see a huge influx of new listings. That said, if the market is slower, there may still be an opportunity to get seller credits from sellers. Now, this is the most important thing I'm sharing in this video, so pay attention. Getting seller credits can be used either to lower your out-of-pocket cost, or it can be used to buy a lower interest rate. In 2024, we were able to negotiate between $15,000 and $20,000 for most of our clients, and they either used this to pay less money at closing, or they took what would have been a 6.5% interest rate and got an interest rate in the 5s. Or they used that to do a temporary rate buy down, which got them a rate that was in the 4s before coming back up in a couple of years to the full interest rate that they would have had. Now, we work with some of the best lenders in the state, and if you're interested in how all of that works for your specific situation, I highly recommend reaching out. We could connect you to some of our lender partners who can walk you through all of this. I planned on making this a fairly short video, but there was just a lot to cover. So if you're thinking of buying or selling, you have questions about timing the market, what interest rates are doing, how buy downs work, what pre-approvals look like, what you need for that, how much you need to make, how much you need to have saved, all that, reach out to us at the contact information at the bottom of the screen. We would love to meet you and learn more about your situation and figure out a way to help you buy or sell in 2025. Well, I look forward to hearing from you, and I'll catch you in the next video.